Gina Harman. Thank you for being here. And as the CEO of the Accion Network, we're the U.S. Network, we're very pleased that you could come to GW today to speak about microfinance in the U.S. For taking the time to teach some of the students here about what the microfinance industry in the U.S. It looks like and where it's undergoing. I think to start this interview off, I wanted to begin by having maybe describe briefly for those who are still unfamiliar with microfinance, especially in the U.S. What does that really look like, and what does Accion, with its U.S. network, seek to do in terms of the services it delivers?
Okay, that's a very fair question, and I'm happy to be able to answer it kind of briefly now. It's been a pretty complicated situation for microfinance in the U.S., but over the last few years, I think primarily driven by the very obvious need for practitioners to pull themselves together to deal with the consequences of the recession on small business. Accion has done that and has taken the lead in the industry in doing that. We've been at this for 20 years, and most people, I think, have discovered Accion in the last 3. But what our work amounts to is seeking out business owners or being sought out by business owners who, with a reasonable small investment of capital, see the potential to grow or start or, in these days, actually maintain a business. And that is fundamentally the same thing that happens overseas. It's the scale at which it happens in the U.S. that's different. Just the other day, Michael Schlein, who's the CEO of Accion International, and I spoke to a group of folks, and he described a woman he met in Latin America who spent half of her day sewing and half of her day traveling to get materials. And what they were able to do with a small loan was allow her to buy inventory a week in advance. So she recaptured 6 times 8, 48 hours of potential work time, which allowed her to grow her business. And when Michael told the story, I was thinking to myself, geez, I've heard this story so many times, because it isn't very different for businesses in the U.S. that are reliant upon inventory. People who have limited credit or no credit, they're not going to be extended credit by a vendor. And so they face a very similar problem, and for some it means accessing capital from a payday lender or a community lender who makes decisions really quickly. They spend their time, they go and buy their inventory, they go back to their operation, they sell the inventory, they go and they pay off the lender, and then they start the cycle over again. So our loans range in size from about $500 to $50,000 consistently across the U.S. And in some markets, as participants with the Small Business Administration, we're making loans up to $3 million where traditional forms of collateral like real estate are available.
Wow.
And that's more prevalent in a place like Arizona and Colorado than it is in New York. But that's really filling a niche that's been left by the traditional banking institutions. So a borrower will come to Accion for a loan. Almost everybody always asks for the full amount, the $50,000. Almost nobody gets it because the ability to assess the business and its capacity for taking on debt is something we find a lot of business owners have a hard time doing. And so our initial engagement will be creating cash flows. And sometimes that is quite easy to do, and sometimes it's literally that sort of legendary image of a microfinance lender unpacking individual receipts from a paper bag to try and construct a financial picture for the business. But these are businesses that provide simple services in a community. They are taxi drivers and small fleet drivers. They can be truck drivers that go long distance. They can be the guys who pick up the remnants of large shipments into ports. There are women who make tortillas and empanadas at home. There are women from Africa who are making wedding dresses. So a good portion of the businesses are about continuing home country traditions here in the U.S. There's obviously a need for that when there's a large community of immigrants in one city. They are at-home businesses. These are businesses that banks can never lend to because they simply, there isn't a reasonable means for them to service that part of the market. So it could be a family daycare center. It can be a woman who's interested in being in the clothing design business. It can be a sole practitioner or accountant who needs a loan to get a second computer so he can expand his practice during tax time.
Are these businesses that typically don't have a credit history and thus they're served by microfinance institutions?
It may have a credit history. It's probably, if they have one, it may be damaged in some way.
Okay.
And again, I think we'd have to talk about microfinance pre-2008 and post-2008
Sure.
because the landscape has changed dramatically.
Mm-hmm.
When the recession started, and people would ask me whether our borrowers were having more trouble getting credit, I used to kind of smile at the irony of the question.
Mm-hmm.
The people we serve never had access to credit, so when you don't have any, it's hard to have less.
Sure.
But now we're seeing a segment of the population we didn't see before, people who had lines of credit at a bank who have been cut off, people who were funding their businesses cash flow using credit cards at like 16.5%, 17%. We're now seeing 28% interest rates and know they can't sustain themselves that way. But before 2008, it was a combination of people who had absolutely no credit, and that was largely women. And we had a product called a Credit Start Loan, which was designed to be a reasonably short-term, small loan, so $500 to be repaid over a year, that was specifically designed so women could establish credit in their own name. And then there are the borrowers who had limited credit or limited credit history, and then there are borrowers who have some damaged credit history. But those are not the only factors. Sometimes it's just the nature of the business that means they can't access credit. As I mentioned, banks will never lend to a home-based business. They wouldn't. How could they go into a home and evaluate a family daycare program? They're simply not able to do that. And we define startups as 6 months. We have actually 2 definitions because we have 2 different products. But for us, a startup is 2 years of revenue and cash flow positive. For a bank, it's 5 years of positive cash flow, tax returns. There's a huge gap there. So
quite a startup in the bank size.
Yeah, with very different definitions. So there are those folks as well.
In our course, we talk about microfinance internationally primarily and describe microfinance as the consultative group to assist the poorest defines it as a range of financial services. But in the U.S., you've talked a lot about credit. Are there other services that Accion's network partners offer? And what are those? And how do you, given that you have to be sustainable as an organization, how do you manage that cost associated with the services?
Whatever, probably shouldn't be the 24,000, whatever the question
whatever.
was anymore, nothing. You can't get an answer for that much on anything with substance abuse. So, what we've found, and we have, being around 20 years, we've tried just about every possible combination. There was a time when Accion actually did group lending in the United States, and it was, in those days, which was about 18 years ago, it was impossible to report the behavior of the group to a bank to establish credit. I think it can be done now because I think Ormi America is doing it, but at the time, the organization made the decision that establishing credit was really the goal, not making a loan. And so if you see credit as an asset, then you have to think about that process differently. We really only have one product, and that's a term loan. And at various times we've tried lines of credit, and we probably will come back to them as the complication with lines of credit beyond risk is the calculation of interest on a daily basis, which most of our systems up until now haven't been able to do. But what we find our biggest investment is in the upfront part of the process that precedes an application being handed off to an underwriter. And what we do in that period, besides locating the business, is develop financial statements, just as I described to you about the cash flow. And because the loan consultants become advocates for the business and because they've learned working with the underwriter what the underwriter wants to see and what the underwriter doesn't want to see. They spend a lot of time up front putting that package together. And that might mean collecting 25 different documents, or as many as 35 different documents, to demonstrate good credit behavior on the part of the potential borrower. And through that whole process, the borrower is understanding that they have a credit profile, whether they knew it or not. It probably involves pulling their credit score, and if there's something on it, correcting it. The way I think about it is the added value isn't really the credit that we extend. It's everything that goes into beginning to give some formal structure to the business, making folks aware of what it means to have an active financial life in the United States, because our practices are very different. Actually, they're different state to state, but they're certainly different from the experience of many of our clients in their home countries. We will counsel somebody that, as an example, food trucks are very popular sources of lunch in New York these days, and in DC as well. And it's a great business opportunity because there's a relatively low barrier to entry on the finance side. But if in New York you don't have a permit from the health department, if you don't have insurance on your truck, you're going to lose your truck. They're going to impound your asset. They're going to put you out of business. And the fines are going to be pretty steep. So if someone comes to us and they own a truck, they're not going to get a loan from Accion without understanding that they have these other obligations to be a sustainable business institution, which is what we're trying to build.
So I think there lies in perhaps one of the distinctions between microfinance in the U.S. and what people tend to know about microfinance abroad, and especially those micro entrepreneurs working in the informal economy in places like Bangladesh, Mexico. What other distinctions are there in terms of from what you've seen micro enterprise in the U.S. versus one abroad? You mentioned things like licenses and a range of other factors that go into establishing and sustaining a business. What other distinctions?
Well, I think I mentioned one earlier, which is the scale.
The scale.
Right. So, if I think the Small Business Administration defines a microloan as up to $35,000, though we've been advocating for the last few years that they need to increase that to 50, and I think it's either just happened or it will happen. If $50,000 can have a manifest impact on the business, we're talking about revenues overwhelmingly the case under $1 million. But it's still, compared to a $25 loan that allows someone to, purchase wool or buy a goat, it's really hard to compare that. And we've spent a lot of time talking about what the differences are. One of the others is the availability of other forms of credit products in the United States. There is the impression that there's a bank on every corner. Well, there is a bank on every corner in many neighborhoods, but there are neighborhoods that we serve, there are no banks. And even if there were a few years ago, they're withdrawing today. So one of the big differences is the presence of alternative credit. And that goes for those who can qualify for some traditional credit products, and those that are reliant upon things like Rent-A-Center or pawn shops or the loan shark, and there's probably 5 or 6 others. I think all of those exist in the developing world with different names. But here, it creates the impression that there are a lot more opportunities for people to get what they need to grow a business, and it's a false impression. So I think what we see is a lot of folks who are starting businesses here have owned businesses in other parts of the world, or they were raised in a family of enormous entrepreneurial spirit, and they bring that with them. There's also employment opportunities here at minimum wage, which is very different from the developing world. And so, to own a business owner often has a job, and the business becomes their secondary form of income, and it's a way of getting above the poverty line in the U.S., as distinct from getting out of poverty. we can debate what poverty means in the U.S. Clearly there is poverty, but fascinating. Number of years ago, a book was published called Profiles of the Poor, and maybe you even use it.
Portfolios?
Portfolios of the Poor.
Professor Murdoch.
Yeah.
And
Which
Rutherford.
Yeah, so it's
Great
used
book.
a lot
Yes.
in classes, right? And
Yes.
we've just formed an advisory board about, I guess, 6 months ago to do portfolios of poor here in the U.S.
In the U.S.
Yeah. And we met for 2 days last week to talk through what's happening. There's about 268 families who are now part of the project. And what was so striking to me was even with a very well-educated group of people in the room on the advisory board, and there are practitioners, we're in the minority, there are academics, every author of every great book on microfinance is sitting in that room. There are researchers and there were funders. The consequence of really understanding how a family manages their finances is the recognition that we really just don't know. And people are very inventive, and they'll find ways of making ends meet, or they'll find ways of getting a business off the ground. We know from documentation that in the U.S., and again, this is one of the big differences in the developing world, that it's first family and friends that may be the same, but it's second credit cards. And what we're seeing among this group of folks is they have 7 or 8 financial products. They don't use any of them because the thing they feel most comfortable with is sticking it in a sock someplace, and one sock is for the rent, and we heard stories of women who take their first 2 paychecks and it goes in the rent roll. And then they have to live on the other 2. And if they can't make it, she won't touch the rent money because she wants to have a roof over the family. So they'll go without food, or she's found a church that has a food bank, and so she goes. But I think what we're going to learn from these profiles is just, going to be so rich and allow us to do what I think microfinance needs to do in the U.S. next, which is understand a range of products. Probably won't include savings because of the regulatory environment, but it might include the capacity to save on a prepaid card, where we wouldn't be holding the deposits, and so we stay outside of that regulatory environment, which is important for us to do. But I think for us, it's been a kind of a recognition that we don't know enough to design the right products. That the world view that we bring to it is very traditional. It's savings accounts, checking accounts, a relationship with a bank. Among the two fastest growing financial products are prepaid cards and payday lending. So we can look at those and say, well, payday lending is bad. Lots of people will say that. But it's a $40 billion growing $65 billion industry. So
it's being demanded.
There's demand.
The question why?
That's right.
Why the poor one is also.
Exactly. And I think from our side, we've always come at it from the supply side. We haven't come at it from the demand side. So we need to really turn that table. And I think that we're capable of doing it. I think we're going to get help from programs and projects like this one that I've just described. And I think when we understand that there is a real value and a moral value to saying to someone, your establishing credit will give you a lifetime asset, and it will pay out for generations, that we actually mean that, but that we not think about their financial needs in old terms. We need to think about them in current terms and in the current marketplace. And I think it's been hard for us to make that shift. But that's one of the things the network is trying to do.
That's wonderful. I didn't ask you this earlier, but the number of organizations, microfinance organizations that are within the Accion US network, what is the current number?
There are 5.
5?
5 serving 23 states.
23 states.
Yeah. And we are, in aggregate, the only national player. And there are a lot of good reasons for that. But there are, I believe, somewhere between 250 and 300 microloan funds in the United States. If you look at the top 10 portfolio size, Accion is, the 5 Accions are the top 5.
Mm-hmm.
Yeah. And then there are 5 others, and I hope that over time those 5 others will join the network.
And from your perspective, the pace of growth and
Mhm.
scale in the U.S. compared to what many are now accustomed to seeing in microfinance in the international sphere, what makes more sense in the U.S. and what have you, through your experience, seen in Accion in New York, that this is the right pace of growth, and maybe sometimes the expectations are unreasonable to want to double your client outreach and your loan portfolio?
Well, it's an interesting question. We just had a gathering of all of the Accion staff across the country for 2.5 days, and one of the folks that we brought to speak to the staff was a woman who has been brought into Mi Banco in Peru to be the social impact. I was going to say Google Day, and she's got a very corporate title. I just can't remember what it was. They're serving 500 people a day.
Okay.
And I try to think, what does that mean for us? I don't think it's possible. But I think from 2007 to 2012, Accion has put into place the mechanisms that would allow us to grow rapidly without the consequence of that being immediately followed by a deterioration in the portfolio. Because we've seen that happen. In fact, I think every single Accion has gone through a period of explosive growth that was followed by a period of deep trouble. But here we are in the midst of, very troubled economic times, dealing with the smallest of businesses. They have no shock absorbers. Any unusual event is going to wipe out their assets. And we wrote off less than 2% of our loans last year, which is pretty impressive. Now, I can be of 2 minds. I can say, wow, that's really impressive. I can also say, we're not doing enough loans.
You're not doing enough, right?
Right? And
might be too conservative in your
Yes,
underwriting.
exactly. And I think both are true. But you can't develop a scoring methodology without a practice that allows you to look at a significant body of loans that paid off full and a significant body of loans that went bad, and try and determine very scientifically what makes a good loan, what makes a bad loan. We needed to develop that kind of intellectual property to be able to get to an automated scoring methodology. Oh, we've done that. And we've got really good at the collection side. The difference between serving thousands and serving tens of thousands is in that upfront process, in my view. So right now, I think we've squeezed about as much blood as we can out of the stone that is underwriting and collections.
The back end.
It's the front end. It's the originations that we have to go at. And so what we're looking at today is what technologies are large institutions using that automate the collection of data that would help us create a profile that allows us to make decisions on cash flow basis, because that's really what we do. We can say we do it on a million other bases, but at the end of the day, we are not going to make a loan unless the borrower can pay it back without depleting all of the assets in his or her business, because that's not the game we're in.
Right. There's a question that many have in the industry about how microfinance should function in the U.S., including this notion that there should be social businesses. It's been propagated. Dr. Gina has spoken about it. What are your thoughts about microfinance in the U.S. being a social business versus just a for-profit business, and at some point in time, if an organization like Accion's U.S. network or the individual Accion MFIs begin to get more commercial sources and have shareholders, that they may be, like the IPO we have seen internationally. Do you think that actually has any relevance to the U.S. context? And it's kind of a multi-tier question, but first I guess the social business.
I don't agree with him.
And would you?
And I'll tell you
about
why.
Yeah.
I do think that he makes that statement on the basis of believing that there is an absolute contradiction between the need of a business to drive for profit and the needs of taking care of the poor. And there's lots of history that would suggest he's right. But I don't think that it is an uncontrollable circumstance. Right? So I think there are companies that today are driven by triple bottom lines.
Mm-hmm.
I think we happen to be a double bottom line.
Mm-hmm.
And I'm not prepared at this point to say the only protection the poor have in this money lending business is that the lender can't be driven by making a profit. Partly maybe it's kind of a funny thing for me to say that. We're so far from making a profit that I don't have to worry about that question right now. I do worry about getting sustainable.
Right.
And I don't, it's, our top interest rate in the country right now is about 15%. Credit cards are nearly twice that. We charge on the basis of risk, we do not charge on the basis of our costs. And that is a question that we are now beginning to tackle, because we're not sustainable the way that we are right now. And you have to be willing, at least intellectually, to have the dialogue, to then be able to look backwards and say, is this an emotional obstacle we're facing, or is it a pricing obstacle? Right. What happens to the number of people we serve if we take our interest rates up to 23%, or 36%, which is what the federal law would allow if we looked at our loans as small dollar loans, which we don't. But it's not 300%. Right? And I think our task is somewhat different. We could change the model by building a model that says we're going to keep our customers for a much longer period of time, because we all know that the cost of acquiring a customer is much higher, right, than selling more products to the same customer. But our mission has been to have them graduate to move on to a bank.
Right.
So we're kind of defeating the easier path. That's not happening so much right now, so I'm not so worried about that. But
so to that point, so the success for Accion is that they can graduate a customer, small business owner who is a borrower of Accion in a certain period of time to a formal financial institution.
That has been our measure of success. I'm not sure it's a valid one right now.
Okay.
I think it's more appropriate for us to look at the role we've played in growing a sustainable business institution and growing good credit as a lifetime asset. Have we contributed to developing a series of behaviors or a set of behavior that allows people to make good decisions? And the opportunity, in my view, for Accion to get sustainable and then have to answer the question, do we have to be social business or not, is to look at this range of financial products that people have that are available to them but don't serve their need, and come to understand what is that need, and because they have a trusted relationship with us, can we provide that product? Not compete with the banks, because honestly, if there were a product, they clearly are trying everything they can think of to reach the 25% of American households that are unbanked, right? And they're going to be a lot of failures, and there already have been. But I think because we're so close to our customers that we have a unique role to play in their lives and in the lives of their communities, and we should not. I think it's more a marketing line that we want our clients to graduate to be able to get banking finance. What if the banking industry says we're not interested in doing business loans anymore?
Right.
I mean, so what are we holding on to? I think it was a good and easy way for people to understand that this was never intended to be a permanent financial institution, and that we had higher aspirations for the business owners than maybe they had for themselves. And that was a way of giving expression to that. But I'm not sure it's a good way to do it anymore.
That's I would say an enlightening perspective that many probably haven't thought about, because I think from what we've discussed in our course, many times the students get to see microfinance institutions, then that they ask the question, are they just lending for lending's sake?
Right.
Or is there something bigger, because weren't they established, whether their mission has a social component, maybe poverty, what is something greater than that? And in the US, it seems like small business creation and supporting the creation of small businesses and sustaining them is a very important endeavor. And Accion looks at it from a very, it's a longer term view than just the short-term need for credit.
Mm-hmm.
I know we could talk at length about microfinance in the U.S. I wanted to conclude with, I guess, one question, because I see the passion and commitment you have for microfinance, but I know you've been in this the arena of kind of social activism and women's empowerment for much longer. We have many students, graduate students, whether they're in the Elliott School of International Affairs or in the School of Business, who are quite intrigued by a career in microfinance. What brought you over to microfinance, and what was that motivating factor? And do you have any advice, perhaps, for some of these students who are contemplating?
It's a great question, and I think it was 2.5 years into my role as CEO at Accion USA, where I spoke at the new school. It was the first time any of the teachers in the room stood up and said, "Can you tell any of these young people how they can get jobs?" And I thought, wow, it's amazing that nobody's asked me that before.
Right.
And I wish I had a great answer. I don't. But advice is different than an answer.
Sure.
So I came to microfinance for a combination of reasons. 23 years is a long time to be in one place. And the field I was in was going through changes that predicted for me that it was going to be less fun going forward than I had had over the previous 23 years. I also at a point in my life where my kids were, grown-ups. The youngest is 30, so I really had choices I could make, and that's not going to be the case for your students, most likely.
Sure.
But it was post 9/11, and I live in downtown Manhattan, and I was watching all of the neighborhood shops shutter, and it was a frightening time, and a time of really adjusting the patterns of my life, because for the first time in my life I had to cross a police line to get home, and that, that's, you don't forget that sensation. And Accion had a very significant presence in the downtown community, and I encountered them, and I said, well, I need to find out more about these folks. And I had been aware of microfinance internationally, but had no idea anyone was doing it in the U.S. So I was ready for a career change. I found Accion and joined as a volunteer. And I think at my age, which then was 59, volunteering or joining a board was the rough equivalent of becoming an intern when I was 27. So I didn't really know when I joined that I'd end up being the CEO any more than Michael Schlein, who's the CEO at AI, knew when he joined the board.
Sure.
We took the same pathway. We got engaged and found in the doing of the work, which is obviously quite different as a board member than as a CEO, that we really loved what we were doing, and then the opportunity came along. I think for me, and I'm not quite sure it's the same for Michael, the fact that I had run an operation, that I had actually produced something that created value, made this a possible move. And I know a lot of students I've spoken to who want to get into microfinance kind of go the route of becoming a consultant and looking to maybe work for BCG or and then come back. And I think that's a very valid path. And in fact, we have a young man who's working with us who BCG has given to us for a year because it's good for his career, and it's great for us.
Yeah.
But running something is really important, and so many people who go into the nonprofit sector with high expectations about becoming leaders don't ever do that. So my advice is go run something.
No different than some of the micro entrepreneurs that
That's exactly right.
you're serving.
Walk in those shoes.
Wonderful. Well, thank you so much. It's a pleasure, and I think it's very insightful, some of the things that you spoke about with regards to microfinance in the U.S. And we could devote many more lectures to it, but I think this will be very informative. So thank you again.
Thank you. Thanks for having me.
Of course.
As you can tell, I love talking about
Oh no, I could go on for some time too. Thank you.
Thank you.
Lecture 6, microfinance in the U.S. And there's a speaker here that is going to be giving you a talk about microfinance in the U.S. But before we get to that, we have some guests here. So I would encourage you to participate in the discussion because the students here will tell you we tend to be very interactive. So we'll have, I think, plenty of time for Q&A before Gina has to rush off to the airport and catch a flight. But the microfinance topic that we're looking at today in the U.S. is not something that we've covered in any of our previous lectures. Microfinance in the U.S. has very unique dimensions, and our speaker today, I'm very, very pleased that she could take time out of her schedule. Gina Harman, who is the CEO of Accion's U.S. network, is going to give you a lot of insights about that. Gina is a very passionate advocate for microfinance as an economic development tool, but also for women's empowerment issues. And she has a very vast sensibility. You've seen her profile on Blackboard, and essentially the brief notes that I guess I want to mention is the amount of time she spent both in the nonprofit as well as the for-profit sector. She's managed 12 brands and over $600 million in the consumer division of Harman International. So she is not new to dealing with large portfolios. And recently, Fast Company, which has its League of Extraordinary Women, is it an indoctrination? They have recognized.
It was a complete surprise to me.
Gina as one of the 60, I believe, most influential women that are creating impact around the world. It's a tremendous list, and Gina is part of that because of her tremendous background. So she has a lot to talk to you about. We've had a chance to speak about microfinance in the U.S. and discuss a lot of the different challenges that we face. So I'll turn it over to Gina,
Great.
And she'll take it.
Well, thank you for inviting me, and that's a hell of an introduction. So, I want to be sure that I speak to the issues that are of interest to you. But before I even attempt to do that, I want to show you this very short video that we were fortunate to have made for us by a graduate film class out of California, because it's really about our clients. And at the end of the day, microfinance is about helping people reach their dreams. And business is the vehicle for doing that. And I think this will kind of help paint a picture of why that's so important.
I think the single most common thing that motivates these small business owners is they want to take care of themselves and their families. When we have conversations all the time that start out, it's about wanting to contribute to the community, or it's about living a tradition in the family.
Okay, so now I don't really know how to turn this off. But you can do that. I think Romy and I were having a chat before you guys gathered, and we were talking a little bit about the differences between microfinance in the US and microfinance in the developing world. And that video probably is presented you with enough raw material for a lot of questions, because what you see here is are businesses that in one case received a loan, not $100,000 from Accion, but in total put together capital of $100,000 to open this daycare center. And yet on the other end of the spectrum were two women, neither of whom were able to get credit from a bank. Neither of whom had a good credit standing. One was unemployed. The other is an immigrant who's been in the United States for over 5 years. But she didn't have a profile that a bank, and she's in New York, that any banker in New York was prepared to lend her money. And the restaurant, as we were talking about before, and when I talk about microfinance in the US, I need to talk about it before 2008 and then post-2008, because the profile has really changed. Before 2008, Accion had been in business in the United States for about 18 years. we had put about $210 million on the street in about 30,000 loans, 30,000 unique loans, so 30,000 different businesses. Very small numbers when compared to the need, very small numbers when compared to what happens in the international markets. But Accion is probably 40 to 45% of the US market in outstanding portfolios to businesses of this size. And for us, a micro business is one that employs 10 or fewer people. And by the US definition, a small business is 500 or fewer. So unfortunately, and I noticed that you wrote it down, so I want to correct it. The statistic about where jobs are generated in the United States is all the private sector jobs. 86% of them come from businesses that employ 5 or fewer folks, which is a pretty amazing number when you think about it. In fact, there was a study done, I think about a year ago, from the Association of Enterprise Opportunity, which is a trade association for microfinance-focused organizations, whether they're lenders or financial education practitioners. But they're all focused on microenterprise in the US. And what their study documented was, given the number of small businesses, 10 or fewer employees in the US, if 1 out of 3 of them added 1 additional employee, the US would be at what the US considers no unemployment, which is 4%. So that is a pretty compelling statistic and is at the essence of why Accion continues to do what it does. It is about creating financial independence for the individuals we work with. It's about building healthier communities, which I think the daycare center was a pretty good example of. It's about contributing to the economy in the form of employment and in the form of revenues. And it's about building economic justice in the United States. And that is where the passion for what I do is derived. And people will describe us in lots of different ways, from we kind of level the playing field, because when people can't access capital from a venture fund, I'm always asked, why don't we take an equity position in the businesses? So you tell me how I would go and evaluate the woman who has a mobile sonogram and take equity stake in her business, and what would the exit plan look like? It's the right thinking applied to the wrong set of facts. But it is, the reason I say it's the right thinking, it's about unleashing commercial markets to be put to work to grow small businesses and generate jobs in the US, but it doesn't fit the nature of the businesses that we work with. In this very brief film, I think what we try and suggest is that if you think about the neighborhood in which you live, the chances are that the place you stop and buy coffee in the morning is a micro-enterprise. In Washington, D.C., it may not have been a recipient of a microloan, because this has proven to be very difficult territory for micro lending. And I'm sure you've heard more about that from a more reputable source than I. But where you buy your newspaper, if you are running late and you jump into a car that isn't part of a medallion taxi service, somebody who's distributing food from the large commercial markets to a small food market in your neighborhood, a dry cleaner. It can be a sole practitioner, because when you come out of dental school or you become a CPA and you want to open a business, the bank isn't going to provide you starting capital, because banks don't lend to startups. Those are the few and far between of what micro lending is in the United States. The standard portfolio is made up of low to moderate income families, very dominated by immigrant populations, and there's lots of discussions about why that happens, and I'll come back to a little bit of it. They are businesses in part that allow for a cultural connection to home countries. So that might be manufacturing food products, or otherwise known as cooking empanadas at home, or making tortillas. It might be a woman who was a client of ours in New York, who made traditional African wedding dresses and sold them at markets at holiday times. So there is a very strong connection between family and cultural tradition and the kinds of businesses that people start. And there is a very strong connection between the countries where entrepreneurship is burgeoning, where there's a long storied tradition and history. There is a ranking actually of entrepreneurship in the world. I can't remember the name of the report, maybe you know it, Romy, but Uruguay ends up at the top of the list. You know, what causes that to happen? Well, the speculation in the report is that in part it's individuals need to create the opportunity to change their economic future. And you can see those patterns from home countries repeated here in the US. So what dominates the portfolios across the Accion areas in the country, which includes 23 states. And I'll just give you a visual, because I think it'll help you to understand what we're talking about. If you start at San Diego, and you go along the border states of the US, and then you come up the East Coast to Maine, and then you find the Mississippi, and you look at the states that border the Delta. That's where Accion has made its living, or not, over the past 20 years. And in each of those areas, there's a dominant immigrant group. Out in Texas, it's been Mexicans, but that's changing. There's now a very large Ethiopian community in Texas. In New York, it's the largest population of folks from the state of Puebla in Mexico live in New York. And it is a very strong community. Brazilians in Miami and New York and Boston. And Brazil is a huge country, and the Brazilians in Miami have very different traditions from the Brazilians in Boston. And yet, there is a clear culture of several things. Starting business, somewhat of an aversion to debt, which brings with it an absolute commitment to pay it back. These are borrowers who are generally connected through a church or a soccer club, and in a kind of an analog to group lending, they act as the social capital to make sure that a borrower pays back. Because someone who fails in the small Brazilian community in Boston is going to very publicly be recognized for defaulting on that loan. And so that pressure is there. And we see that repeated all over the country. I want to step back and give you some just basic facts about microfinance. The Small Business Administration of the US government says that a microloan is $35,000. At Accion, every Accion organization, and there are 5 of them across the United States, lends from $500 to $50,000. And the most significant, the highest interest rate is about 15.5%, and the lowest is about 6%. We get to 6% most of the time because somebody has provided us funding to buy down the interest rate. So if you think about 5 to 15% and compare it to any of the microfinance institutions you've looked at in the developing world, that might be interest on a monthly basis, but it's certainly not annual interest rates. And the environment in the US frequently is described as one where the regulatory circumstances will not allow microfinance institutions to charge an amount of money to cover our costs, because the regulation is there to protect against unscrupulous lenders. It was probably my 5th day on the job at Accion, and I went to Deutsche Bank for a meeting. They had been a supporter of Accion's, particularly right after 9/11. And the fellow who runs the part of the bank that's engaged in supporting microfinance institutions in the developing world said to me, okay, Gina, you come from the private sector. Why don't you just charge in interest what it costs you to make one of those loans? And I was the newbie. I said, regulations won't let us do it. And he said to me, that's intellectually lazy. I thought, wow, this is a great first day. Neither answer is the right answer. But for Accion, our interest rates are set by determining different levels of risk. They are not set by covering our costs. And we don't choose to do that simply because regulations would not allow us to. We do it because making a loan for somebody to create a business is about establishing good credit. It's about allowing the individual business owner and his or her family to rise above what a minimum wage job might allow them to earn. And it's about accumulating wealth. And if we charge 35, 45, 70% interest, which is, right now we're 68% self-sufficient. So you do the math, as a former president said. I don't know that we'd make very many loans because we would be bleeding whatever asset there was in the business out to collect interest rates at that level, and people wouldn't qualify. So in a way, my friend at Deutsche Bank was right. It was intellectually lazy, and it made us think about what is the purpose of the interest rate. Right? And it's clearly there to cover some of our costs. It's clearly there, in my view, to meet the expectations of our funders who think we should be charging interest. And funders have had a very heavy influence on the way microfinance is thought about in the United States. It's there because charging interest allows us to work with a borrower to establish good credit behavior and to report that to the credit bureaus. And it's been well documented in many studies, one in particular by the Kaufman Institute, that good credit over a lifetime can save a single family somewhere between $350.5 million a year without the assumption that a child in the family is going to college. Well, where do those savings come from? It comes from not having to put down 2 to 3 months of rent to get an apartment. It used to be you couldn't get a cell phone without putting down $500 of a deposit. Anything that you think of that you do, maybe with some ease, is much more expensive for somebody who doesn't have credit. And even credit card fees are much higher. Do you all have credit cards? Yeah? Anyone recent, do you? You didn't shake your head. Anyone have the experience recently of asking for a card? I was in a room of Citibank bankers last Tuesday having a very similar conversation to this one. It was the women's leadership group, and they wanted to talk about microfinance. And one of the women raised her hand, and the question she wanted to ask me was whether I could give her advice about how her daughter could get a credit card. She was going off to college, and they couldn't get her a credit card, which is a really interesting turn of events. My kids are all over 30, and for me, the challenge of credit cards when they went off to college was how to keep all of the free ones from the mailbox ending up in their hands. But this is partly the change between pre-2008 and post-2008. So I just want to tie that back. Before 2008, the people that Accion lent to were people who had no access to traditional forms of capital. Couldn't get a loan at a bank, couldn't get it because the business was not one the bank understood, couldn't get it because the amounts were too small, couldn't get it because they had no credit, couldn't get it because their credit was damaged. So when the banks withdrew from lending in the United States, it had no impact on those who couldn't get credit before because they still couldn't get it. Right? But it started to have a very significant impact on those who were kind of on the bubble. Lots of businesses that had lines of credit, which are a very expensive way to manage the cash flow in your business, we're seeing their interest rates go from 24 to 29%. or we're seeing them just evaporate. Businesses like the restaurant that you saw, which started out as a food truck, could not get a loan from a bank to move from a food truck where it was this couple, man and woman, only, to this restaurant that they now operate, which employs 12 people. And so if we made a movie 10 years ago about Accion, I doubt very seriously that you would have seen clients who amassed $100,000 to start a daycare center, or a young white woman talking about the fact that the banks didn't laugh at her, that they might have been laughing at her, but they didn't laugh out loud. What you would have seen were the sons and daughters of immigrants or immigrants themselves. And that population has changed because the role Accion provides in the US is to make capital available to grow businesses where it isn't otherwise available. And the numbers of people for whom that is the truth today has just grown exponentially over the last 5 years. How long have I been talking? Okay. 25 minutes. I want to leave a lot of time for questions because this is a huge topic. It's not, I can tell you all of the wonderful stories of the people that we've met and I've met and worked with, and what inspires me to believe that an organization that after 20 years has only gotten to 65% self-sufficient is going to find its way to 100%. But that may not be what's on your mind. Typically, in my first round of conversations about US microfinance versus international microfinance, it was a long process of saying this is how we're different. Our interest rates are different, our loan sizes are larger, our businesses are taking place in a world where financial products abound, whether they're the right financial products or whether they're accessible to people who need them. There are banks everywhere, there are credit cards, there are rent-to-own furniture centers, there are pawnbrokers, there are loan sharks, there are many, many ways in which people can find financial products. They may not be good for them. They may not be good products and they aren't certainly far from transparent. And somebody who buys a large screen television, which is the single largest item of inventory at rent-a-center businesses, a $3,000 TV screen is going to end up costing that family over $7,500. But nobody knows that when they go into a rent-a-center. What motivates them is they want a television, and this is the only place that's going to give them one. Right? And are those bad decisions? Yeah, probably. It's probably better to spend their money some other way. But it's, I think, more an example of why the environment in which we operate is so very different from a village in China or in India or in Africa, all of which are places that Accion International operates today, in the most rural areas of India and China. I had challenged a young student, not of mine, a while ago to model what the actual value of a $10,000 loan in the US, given the cost of operating a business in the US, to a $25 loan that allows a woman to buy a goat. And I think they got really tired before the project was over. But instinctively, and instinct is a matter of accumulated knowledge expressed in an informal way, right? I don't think we're that far off. We were talking earlier about how what Accion does and its approach is much bigger than a loan. And a food truck is a great example. I hear they're proliferating in Washington. They're thankfully all over New York, in New York City where I live, and our office is in Brooklyn, and without it there would be no place to eat, literally, other than a TGIF. In the city of New York, to be a legitimate food truck owner, you have to have insurance on your truck. You have to pass a health department inspection. You have to have a license. There are so many costs associated with entering the business that a business that is a good choice for people because the entry-level investment is so low becomes a very complicated business decision over time. And what Accion will do is move the enthusiastic business owner who's gotten a food truck and is selling water and sodas and maybe some other things, from owning the truck to owning a legitimate business that pays taxes. And our end goal isn't paying taxes. But you can't pay your taxes if you don't know the finances of your business, because you'll probably make huge mistakes. It is knowing the finance of the businesses that is part of our end game, because sustainable business institutions is what we need for this to actually work as a tool for economic development. Go ahead.
So do you invest in the informal sector or not at all?
Do we, as Accion, no. We only lend. We do not make investments. We don't.
But lending to the informal sector?
Yes, we lend to the informal sector. Mm-hmm.
Okay.
Very much so.
Okay, because I would say that as a main difference with the other countries, because I come from Mexico, and there you see the informal sector every day. You can see, you can feel it. You have so many people working in the informal sector, and that's why I thought that microfinance there I can see very clearly, because it's.
So give me an example. Paint me a bit of a picture of, you see the informal sector every day. What does it look like?
Oh, you're driving in your car and you stop at the stop sign and they're selling you guns and someone just comes by. And you know he's not paying taxes, he's not regulated.
Right.
So, and I thought there are so many people that way. I thought it was easier to do microfinance because you know that with a small loan, they can act, and that was my big question on how you do it in the United States, because it's not that common. If you're in the formal sector, it's not seen the same way.
It isn't seen the same way. And when I say we lend to the informal sector, I mean something different from people who approach you in your car and want to sell you chewing gum. There are many, many businesses that Accion supports that are below the threshold of regulation. Should they be businesses that pay taxes? Yeah. Are we going to urge them to do that over time? Yes. But that we will not turn somebody down because they haven't paid taxes. We're going to spend time initially helping them, helping to gather the information that will allow an underwriter at Accion to say, this is a risk we're willing to take. And that takes many forms. You know, it is no joke that you can see a loan consultant in an Accion office sitting with a bag of receipts trying to create a cash flow statement, because people don't trust banks. They conduct their business entirely in cash. They don't want to put money in an institution and not be able to get it tomorrow, right? Because tomorrow there may be an emergency and they need the money and they're not going to wait until 9 o'clock the next morning. They are just making it day to day to day. And they've probably had the experience of relying on a bank and getting killed on charges. Right? So how many of you have ever used a check cashing facility? No, this is not an atypical. I asked this question in a conversation in a college in New York City, and about 50% of the people raised their hand. It was really interesting. They were very familiar with it. Typically, when you talk to somebody from the microfinance industry, they'll tell you that a loan shark and a check casher is not separated by much. Right? They do know about payday lenders. Okay, so then we'll throw the third one in the group, right? Loan sharks, payday lenders, check cashers. In a broad statement, largely of emotion, people in this field will tell you that a check casher is not much different from a payday lender. But if you look at the facts and you sit down before Dodd-Frank and post Dodd-Frank, while everybody's still confused, it's probably still happening, somebody who lives on a cash basis who had a checking account was way worse off trying to conduct their financial business using a checking account than they were going to a check casher, because you can't overdraw at a check casher. You cannot spend money you don't have at a check casher. You do pay a substantial amount of money for each transaction, but you don't pay a penalty for going to cash your check, right? Other than that one penalty of having to pay somebody for it. It's payday lending. We were talking about it earlier. What is wrong with payday lending is, in an environment in which people's wages and real income is declining, the likelihood that you're going to take one loan and pay it off with one paycheck is really slim. But as a short-term loan, the interest rates are high, but it fills an immediate need for cash. Car broke down, can't get to work without it, can't pay the repairman because I don't have the cash. What's better, staying home and not going to work? Going to get a payday loan at 35% interest and paying it off in a week? Probably you'd think that would be a better choice. But if that week turns into a second, third, fourth, fifth, sixth week of rising interest rates, and then you end up, right, with 300%, it's not a better choice. Do they make their money on the assumption that people are going to keep coming back and they aren't going to pay their loans? Yes, they do. And I would be very happy if Accion could figure out how to bring a transparent, reasonable payday loan to the marketplace. I've looked at the math for over a year and I can't figure out how to do it. It doesn't mean we're not going to keep trying. We are going to keep looking. We'll try and figure it out. But it's the cycle of borrowing and over-indebtedness that is a problem in the US, laid largely at the hands of payday lenders, and is a problem in some parts of the developing world laid at the feet of microlenders, whose business model says you don't make one loan, you make loans repeatedly. And I think that is such a small percentage of what happens with microfinance in the developing world. But there are products that keep people in poverty, and there are products that help lift people out of poverty. And there are products that help somebody in the US rise above $14,000 a year, or the poverty line. And there are products that make it impossible for people to rise above that.